Good morning, good afternoon, good evening, whatever time, wherever world you are watching this video, guys. Let me go through here and someone post here. This guy taking me here. I teach him 3 years ago. This 3 years ago. This series to report. See, tell him now. Gold the longest spoon. See, gold the longest now spoon is right. So every time is the every data is the every data is the because you can see here. CFT government. You see, every time you read, you need to read overall longest. How much overall longest here in this pair? Gold, commodity exchange. They report commodity exchange. Okay, as a gold is commodity metals. Metals is commodity market. Okay, non-commercial. You need to look non-commercials. And overall longest in non-commercial is hedge funds. Hedge fund position. They are reporting. So any other data is make confusing. So all you need to read non-commercials. So overall longest contract is what 261,685. The new longest added 3,054. The new short also added. All right. So after this, you get this is right. Data is that. That is the new bullish. So from there, you need to go to chart. As I tell you guys, you can read the 3 months data. You can read 6 months data. The more data you read, the more you become successful. All right. So I make things simple, right? Okay. It's the last month, other month before, 3 months data. Okay. So first I need to draw up my key levels. Sentiment is telling me bullish, right? So I need to draw up my key levels. Last month high, last month low, last month conclusion price. When I make that 3, what I see here? I see so far the market did what? This was monthly level, monthly closing price level, right? So what do you see so far? They break out, they pull back, they didn't respect, but again they fake out. Now what do you see? They go in opposite. See, without confusion, the data is still you bullish. You focus bullish setup in the chart. As you guys can see, for the breakout perspective, okay, confirmation perspective, what do you see here? Weekly candle close here above. The second weekly candle close above, and left as what? Bullish pin bar. You know what bullish pin bar is? Price candles is strong bullish candle. So actually they come back to what? 61 Fibonacci retracement area. After this, you find out directions. So what do you see here? Pin bar tail. So 61 Fibonacci retracement area. You need to use Fibonacci retracement area trend rate. Actually, you need to follow the trend, not against the trend. All right. Okay. When you get this, if Fibonacci retracement area around here, see. Okay, it's around there, 34. All right. So actually, what you want to see, you need to see they trigger breakout series. You need to see they got the trend again, or they maybe come back. Then you need to see a range expansion. 34, 22 for the weekly target. And you don't look any sell setup because why? Because COT tell you bullish breakout. You see the bullish pin bar is there. You see, bullish pin bar is there also. So when you read 3 months data also, try to read 3 months data also, market strategy data. So try to read. If you're not enough, read 6 months data, market structure data. You see, if you get enough data, good. If you don't have enough data, you see, always respect that data. Coming back weekly perspective, guys. I get a little bit flu today, huh? All right. So now, Let me say try to read week 1, week 2, week 3. Is that enough data for me? Week 3 high, very early high. Week 2 very early low. So in this particular case, what we see, the week 2 create higher inside, trigger breakout tailors, trigger breakout tailors. Week 3 come back for the liquidity, sell side liquidity, sell side liquidity, and collect in our buyers. Okay, now again, it was a trend market, right? They broke the trend. Again, what do you see here? They create new trend and then a breakup. So this is short time, lower high broken. So bullish market. If that's not enough, then you need to read more data, like 6633. Let me say here, if I'm not happy with that data, like last week, I need to read more data. Okay, here, week 1, week 2, week 3, week 4, week 5, week 6. Okay, week 6. What do you see week 6 here? So I need to read the data also. If that data is not enough, okay, if I'm not happy with that data, I need to get more clarified price action. Data. It's about data. It's about reading data, guys. CO2 report tell me what? Bullish. 3-month level weekly candle conversion tell me what? Bullish. So I need to read also data. Market size data. Trend data, guys. So week 3 high, and week 6 high, week 6 low. That's our value area. You guys with me? So actually, when you read week 6 low, and now the market create what? Higher inside. Higher inside. Higher inside. Higher outside. Breakout. Close breakout. Let's create higher inside, higher outside breakout. Okay. Again, they break this area. They create low inside, lower high, low outside. So it's like they zero setup. So the market is going to go parabolic move, parabolic straight move. You guys with me? So when I read that data, it's telling me now there's a trend against a trend. Okay, I understand that one. There's a trend, uptrend here. Here, a downtrend. Two trends invalidate each other. Again, the market this week go up. This short time lower high, right? The market break up. First breakout, second breakout is confirmed higher high. Higher high. Now they come back for the higher low. Again, they create new trend. Low, inside, low, inside. Again, low, high, inside. That's gonna tell me now it's again trend against other trend. You guys with me? There's a trend here against the other trend. That's how they confuse you guys. So if you don't know the data reading, if you know the amount of confidence, that's why 90% of people are fail money. That's why 90% of people they losing because they don't respect this area. This they create trend again, other create trend again. They create new uptrend again. They create new downtrend. Now they make high. They lift demand. That's why they must come back for the Fibonacci retracement, then go up again. You see here, this area, our Fibonacci, this area is our demand zone. Why? Because the trend is here. Okay. In this particular case, what I need to see in this live market condition, I'm talking live market. Tomorrow is day 1 open range. Tomorrow is day 1 open range. I need to see day 1 make it high and low. Or they will break out traders and come back, also give us counter trend. At day 2, expand the range and don't sustain inside. Or maybe they give us 3 sessions setup low for by Tuesday they must give us new buy. Or tomorrow they can rotate lower. They can rotate low in rotation lower below this area. You can look for buy. Why? So what COT that give me? Reading price action data accurately. You see, without confusion. The data, this data I post in Facebook, what it give me, guys? It give me what? New longs added, overall longs still buy. So what I need here, new longs added, new data added. So what I need to, I just need to read the data. So here, I see the trend against the trend. So I see the demand here. You see, I see the weekly candle, bullish pin bar. So they need to come back 50% of partial retracement. So they need to come back this retracement area from entire range last week, from last week low to last week high, because it's a big bullish pin bar. Bullish pin bar is telling me now what? The market coming back to this retracement area. Retracement area. So where retracement area here? 50% discount area. Possibly they have to come back to where? Sniper entry. And here what? In line with the hedge for demand. Hedge for demand. So guys see. So anyone you see making accurate analysis, you see it to date. Don't be confused here. Nasdaq. I will see in Nasdaq US30 bearish. The brother he posted already. He said here Tarek was already short squeeze. See short squeeze is minus overall longest is what? 231,000 changes minus 11,000 longest was closed. In this particular case, what do I need? I need to read the data. There's a bearish confirmation, so I get that data in front of me. Okay, last month high triggered. Last month low closing price here. Last month closing price is here. Last month low is here. So what do we see? Short squeeze. It's true. You see here, the market coiled already. They trigger breakout series here. 3 things market will remember. Monthly level, what they do? They break out, they pull back, they trend. They break out, they go opposite direction. You see? You just don't use a COT report, we use confirmations. So now you need to see the data. Okay, what do you see here? The market coiling what? High and low. They create lower high. Lower low here. Going back to the lower high. Coiling at the lower high. What do you all straight collapse? Possibly high probability straight collapse, guys. See? What's what they're going to collapse. Okay. Okay. As you can see, the market is coiling above resistance, above closing price. And with closing price, why they collecting around here? Why they collecting around here? What time of frame? Oh, H4. I was using H4 time frame daily. Okay, yes, sorry. That was last week H4, right? Last month the closing price here. Last month high, breakout was there, breakout was there, breakout was there, breakout, break back. They are going above. Okay. And now when you read the 3 weeks data, 3 months data, month 1, month 2, month 3, what do you see? You see unhealthy price action. The market was not creating low. When the market created higher high, they must come back higher low. If they're not doing that, they are creating unhealthy trend. Small higher low, going up, small higher low, going up. There's unhealthy trend. That's called unhealthy trend. They are deceiving people. It's about manipulation trend. They want to come back one time. Internal range liquidity, guys. They are leaving money. So that's called a signal print. So signal print is telling you what? The market what? At that high. Okay. When you read like, let me see, six month data. So month 1, month 2, month 3, month 4, month 5, month 6. Okay. What do you see here? What do you see here? Month 6 high, month 6 low. So this area, they must be retested. You see here, they break out. Here you need retest. You see here, what do you see here? The market is creating a higher high, like ascending channel. In pricing channel, we call it ascending channel here. So, how are you going to know the market is coming back to this area? You need to draw up your trend lines and like these highs. So actually, in your right moment, you need to come back for these trend lines. Lower highs, lower highs. Market always come back for the low highs. Support trend line. They must come back the trend line. In order to go up, they need to come back the support trend line. When you go for H4 time frame trend lines and H4 time frames, read 3 weeks, 6 weeks. Week 1, week 2, week 3, week 4, week 5, week 6. So where's the breakout is here? It's here. That is here. So there's some money. There's some money. My mentor say always identify space. This is space. Identify space. That's space for the money. The market always go back for the money. There's no free money in this business. Nobody eat free lunch. Nobody eat free lunch. They come back for the money. Yeah? And when they come back for the money, they run very fast. Be careful. Be careful, guys. All the way people was making money. Now, most of the traders they are holding. They come back for the money. They come back for the money, guys. There's no free lunch. There's no free lunch in this business, guys. If you don't know that, you will learn hard way. You will learn in hard way, my brother. Are you guys with me? Going back to USDT, same process apply. Same process apply. Read the 3-day data, S&P 500, same process apply. If you can keep that simple, it will be simple. If you can't keep that simple, it won't be simple. Well, you know what you're doing, you just confuse yourself. And you know what you're doing. You know what you're doing, guys. But the problem is here, you don't have a trading plan, you don't have a proper plan, you don't seek the truth. That's a problem. Most of the problem you guys have is you don't look for truth. You don't look for truth. That's a problem. Why you not learning this information? Because you not look for truth. You're not searching the truth. See? You are not seeking the truth. That's a problem. Okay, anybody who's making a lot of money, I tell you guys, and you can only learn these information and all try to look for after 4 years of struggle. To be honest, because you will be tired reading supply and demand. You will be tired reading market structure. You will be tired reading everything, but still you see some confused. Things are not going the way you wanted because still you are missing the truth. So try to learn the truth. Shoot report is a number one truth in the market, guys. There's many things like they call interest, what they call it. I don't know. There's so much things exist, but me, I just use the CO2 report. Without CO2 report, I don't even have confidence to look at what I'm looking for. To be honest, without the leverage, foreign. Without kernel confirmations, another bucket, only loose. Only loose. No bucket. Only loose. So without fixed brass section level, without kernel confirmation, without COT data reading, sentimenting, without front side, knowing the front side, they when they open range, they do range expansion. They prepare for you the setup. It's like you are chasing women that you don't know. All right. And let me say, you say you don't even have enough information from Monday, Tuesday box data, and you want to trade. How are you going to wait for Monday and Tuesday if you don't know the date? You see, if you don't know Monday, create high and low. And if you don't know Monday, Tuesday, give you box like this box, high low box. Then from there, like gold, they're going to break the box. They give you a range expansion signal. And from there, you will be targeting full range expansion. So from there, you can make a lot of money. Let me say here, Monday high and low, Tuesday you catch the low of the box. They break the box up. Let me see here. You're going to write how many pips here? 600 pips, 700 pips. With the full margin, you always reach. Are you guys with me? So, try to look for truth, guys, man. Try to look for truth. Then you will find the truth. You see? So, let me say here, Monday. I need to see Monday. Give me box, high and low. Tuesday, maybe they try the box. Or at least they will not be able to put that up because bullish market moves. So if they create like high, they give me box. I'm waiting tomorrow. I need to see the whole box. And from there, I'm going to know they're going up to a full range expansion. Means I'm going to target what? Maybe a new all-time high. Maybe, possibly. You understand what I mean, guys? So maybe 33, 34, 34 for 50. And they go from where? 33.50. It's 1,000 pips. All I need for me is 300 safe. 300 safe pips to make my income, guys. You understand what I'm trying to say? All I need out of that 1,000 pips, I just need 3,000 pips, 300 pips. That's all. With a full margin. Finish. All I need is that. So keep that simple. It'll be simple, guys. I see the 1,000 pips move possibly, but all I'm looking for is 300 pips. For safe interest to buy the tips. Safe interest to buy the tips. Just 300 pips. With a full margin, I get my enough salary. So just think that way. Don't try to catch 1,000 pips. No. Don't be greedy. Just be humble, and you will get it. Just keep looking for truth. When you look for truth, you will get the truth. If you don't look for truth, you will never get away. And the things will not be simple for you. And when you know what you're doing, you will be confused for yourself. Goodbye.